June 25th, 2014, current time 10:21 GMT. Jay Marsley here with Daily Forex Trading Outlook. All the talk today is about low volatility. It's I don't know why they're saying that. Look at dollar yen. Look at that range today, boy. It's 9 pips, 101.86 to 101.95. If we look at some patterns, dollar yen is traded the 102 level. It's printed 10 days in a row, and Eurodollar extended its trade around 136 to 6 days in a row. The Eurodollar 20-day moving average is 135.90, the 10-day 135.72. Dollar yen has yet to test 102, but that range is so tight that it's assumed it will be tested today. If it doesn't and it starts to drift lower, then maybe we get some action. Today is we have a news event. It's first quarter GDP revisions. Markets only seem to be moving on news these days. This is a typically an important one, but since the second quarter has started out so strong, downward revisions to the first quarter probably or should be faded. So if you get a reaction, expect the market to look to fade those reactions. We've seen estimates anywhere from a downward revision from the -1% in the first quarter to -1.5%, and I saw one as high as -2.4%. So perhaps if we get over 2%, the market might try to react, but I doubt that there will be much follow through. So that's there's also durable goods coming out, but the first quarter GDP will be the key focus, and as I said, that may be one that you can look to fade because that's the only action in town right now. They call it the big three. Sterling is trying to correct, but the U.S. dollar, yen, and sterling, and euro are all. Those are the big three. Those are seem to be trapped in these ranges for now. How long it goes on, hard to say. Markets being frustrated, but that's the hand we're dealt. Now, if you look at charts, we might as well go to the 4-hour, because that's the one I've been looking at. Here we are, that's the 200 period moving average. Now comes in at 136.27, which is pretty close to yesterday's 136.28 high. We've been below it since the beginning of May, so continue to watch that, although it could easily be broken through attrition, meaning by sideways trading the way we're going right now. As I mentioned yesterday, on the upside, we have 136. 33 and 42. On the downside, it looks like 135.75 and 135.64. So really 130, it's almost a symmetric range. 25 to 35 pips either side of 136 seems to be the range, and it would take some event, I guess, at this point to break it out. Longer term markets still see the euro risk on the downside, but for now we're stuck in these ranges, especially as long as 136 trades. Now, one word of warning, and that is when you're in very tight ranges, small moves can really exaggerate your sentiment and make it look at this and make it feel like we've had a 5 or 10 pip move can feel like a 50-point move. So just be aware of that when you're trading, and don't get sucked into looking for breakouts when you're in fact in tight ranges. Eurodollar got up to almost 136.20. That was a late day spike in U.S. So that's a resistance on the upside as well. Now, I have been, if you've followed me, I have been posting articles on here. For those who it's not clear, this link is clickable. If you click on it, it'll take you to to the article. I wrote one a while ago, 9 trading strategies for a low volatility market. I think it's a great article. It's common sense. I keep rereading it every time I get into one of these low volatility funks, and I've been using it. So I strongly suggest clicking on this, following through, and getting access to the article. It's really worth reading. Otherwise, that's it for now. Stay tuned for GDP as the next key event. But as I said, it's a number that likely will be faded. The other key event, by the way, is Iraq. And as far as Iraq is concerned, market woke up to it yesterday. That might be an excuse to explain some profit taking in the stock market, as that is an event that's not going away. So whether it becomes a crisis, we'll find out. But for the moment, any time we seem to have a crisis, it tends to peter out as far as a market factor. So just watch it. It's still, it's not going away, as I said. Anyway, that's it for now. Good luck and good trading.